Right now, the world thinks it's watching an oil crisis unfold, and on the surface, it makes total sense why. Energy markets are all over the place. Governments across Europe and Asia are scrambling to hold emergency meetings, and all of the panic. It traces back to one place, the Strait of Hormuz, a narrow strip of water, the only sea passage from the Persian Gulf to the open ocean. Every single day, roughly 20% of the world's oil passes through it, making it the single most important choke point on the planet. The reframe. The general consensus is pretty clear. If something goes wrong here, the global economy breaks. But maybe that's just the story we're being told. Because the real story isn't just about what's happening, it's about who it's happening to. Oil shocks have never hit the world equally, and they never have. While some economies get crushed, others quietly benefit. This isn't a crisis story, it's a story about positioning. Old narrative versus new reality. Most people still think this plays out like it did 20 years ago. Instability in the Middle East, oil shock, US economy takes the hit. For a long time, that was true. Roughly 60% of US petroleum consumption came from imports, so when global supply got disrupted, prices spiked, inflation surged, and the economy hit pause. A clear, linear relationship. But that version of the world doesn't exist anymore. The energy revolution. Over the past 2 decades, new drilling techniques unlocked massive shale reserves. Production boomed, and suddenly, the United States didn't just reduce its dependence on foreign oil, it flipped the entire script. Today, the United States is the world's largest oil producer, which means the old narrative. It's outdated. America isn't on the same side of this trade anymore. Who is actually exposed? So then who is exposed? And this is where you get to the real story. Because most of the oil moving through the Strait of Hormuz isn't going to the United States. In fact, only about 2.5% of it is. The majority is going somewhere else, to Asia, more specifically, China, India, Japan, and South Korea. Together, these 4 countries account for roughly 75% of all oil moving through the strait. So when people say a disruption here will shock the global economy, they're not wrong. But they're also missing something very important. Asymmetric shock. It's an asymmetric shock. For the United States, a disruption mostly becomes a price problem. Oil is globally priced. If supply tightens anywhere, prices rise everywhere. That hurts, but it's at least manageable. For Asia, it's different. It isn't just a price problem, it also becomes a supply problem, and those are very different things. Higher prices slow you down, but losing access to your energy supply, that's when things start to break. Factories slow, energy gets rationed, production stalls, same event, completely different consequences. The winners. And this is where the story shifts. From crisis to positioning. When supply tightens and prices rise, it creates winners and losers. And right now, the United States is on the winning side. Higher prices don't just hurt. They generate massive revenue for producers and exporters. And the United States just happens to be the world's largest oil producer. The same shock creating global pain is simultaneously stimulating parts of the US economy. Natural gas, the hidden layer. But oil is only half the story, because there's a second layer that most people are completely overlooking: natural gas. The Middle East is one of the world's largest exporters of liquefied natural gas, and just like oil, a massive portion of it flows through the Strait of Hormuz, roughly 20% of the global LNG supply. Countries like Qatar and the UAE send over 90% of their LNG exports through the strait. So if it gets disrupted, it's not just oil markets that tighten, it's gas markets too. And once again, this is where the United States shows up. US LNG dominance and market reaction. Over the past decade, the U.S. has quietly become the world's largest LNG exporter as well. One region loses supply, another steps in to sell it. Markets are already reacting. Venture Global, one of the fastest-growing LNG exporters, saw its stock jump nearly 40% in the past month. Cheniere Energy, the largest U.S. LNG exporter, is up nearly 15%. Scarcity doesn't just create risk, it creates opportunity. China, the biggest loser. So if the disruption in the strait is quietly giving the United States leverage, who pays the price? The answer is China. But here's where it gets complicated. Because China saw this risk coming. They've spent years diversifying suppliers, building strategic reserves, expanding imports from Russia, Brazil, and Venezuela. But even with those safeguards, they haven't eliminated the risk. They've only delayed it. China is the world's largest oil importer, roughly 15 to 16 million barrels per day. Around 11 million of those are imported, a huge portion from the Middle East, flowing directly through the strait. In the short term, China can absorb the shock. In the medium term, they draw down reserves. But if the disruption lasts long enough, it stops being an inconvenience. It becomes a structural problem. Because China doesn't just use energy, it runs on it. The geopolitical angle, closing argument. And this brings us to the part of this story that almost nobody is talking about. If you zoom out for a moment, something about the timing of all this looks strange. Not the conflict itself. Conflicts in the Middle East happen constantly. But the timing. Because right as tensions around the Strait of Hormuz began escalating, trade negotiations between the United States and China were reaching a critical inflection point. Tariffs, technology restrictions, supply chain decoupling. For years, the world's two largest economies have been slowly pulling apart. And maybe that's where the real truth in this conflict lies. Because negotiations aren't just about finding solutions, they're about leverage. And leverage comes from pressure. Economic pressure, market pressure, sometimes energy pressure. When you look at the entire situation through that lens, the Strait of Hormuz stops looking like an energy story. It starts looking like a geopolitical chessboard, because if one country can tolerate the shock while the other feels structural pressure from it, then the shock itself becomes leverage. Maybe the Strait of Hormuz isn't just a choke point for oil. Maybe it's a choke point for power.